QuickBooks Online 2025 statement forms. Get ready and some coffee because we're learning how to save time with QuickBooks Online 2025. Here we are online in our browser, searching for that QuickBooks Online test drive, the free sample company file available to everybody, looking for the result that has Intuit.com in the URL because Intuit is the owner of QuickBooks. We're going to be choosing the United States version of the software, verifying that we're not a robot if needed. I'm going to close this prior tab. We're now going to be in the sample company file, Craig's Design and Landscaping. Opening the major financial statement reports as we do every time. The reports on the left-hand side in the standard tab under the favorites. Right-click it on that balance sheet to open it in a new tab. Right-click in the profit and loss, could be called the income statement, to open it in a new tab. Tab into the middle, closing the hamburger, changing the range, 01/01/24 tab, 12/31/25 tab, selecting the drop down to see it in years, running to refresh it, noting that I have 2024-25 side by side, going to the side by side of the tab to the right, closing the hamburger again, process repeated, going from 01/01/24 tab, 12/31/25 tab, selecting the drop down to see it in years, running to refresh, noting there's nothing in 2025 except for that $53.99 for some reason, including not having the prior presentation transactions. Why? Because we refreshed the browser, opened it in incognito window, which I recommend you do as well, so we have as close to the same information as possible as we go forward. Let's go to that first tab and see what we're doing this time. If we select the drop down, we've been looking at the forms, which are used to create the data input, to create the financial statements. They're broken out by cycle: customer cycle, vendor cycle, payroll in essence, and other. Now, we've been focusing over here on this other category, which are kind of like the outcasts forms. They're kind of like the loners, because they don't really fit in any of the groups, but they're still important, and that's why they're in this drop down. This time, however, we're looking at the statement form, which is under the customers area. The reason we're talking about it kind of in this section is because it used to be over here in the other area, and this is one of the things that we kind of have to get used to when we're using QuickBooks Online, and that is that whatever the developers might move things around, and one day you might just go into it and say, the statements are now in another place. And that's okay. As long as we can find them, the functionality will still be usually in essence the same, because the objectives of accounting haven't really changed, right? The double entry accounting system is what it is. We've got to communicate with vendors, customers, employees, do our taxes. That's all the same stuff. But the look and feel where they put stuff, the developers will move that around all the time. I think mainly to justify their paycheck because, they got to do something, right? But in any case, that's where it's at this time. We're looking at that statement form. Now, the statement form is a little bit different than the other forms. Although it fits in the normal accounting cycle, in the revenue cycle, it doesn't actually record anything. So in that sense, you can think of it as basically similar to like an estimate type form where we have an estimate before we make the invoice, or we can think of it similar to the purchase order that we talked about before, which is a request for inventory, but we send the request out before we pay for the inventory or receive the inventory, and therefore nothing is actually being recorded, although we still want to track those forms. And then the statement form is attached to the receivable cycle. It's only going to be used if you're in a revenue cycle that has accounts receivable, which once again will be driven by the industry typically. In other words, if you're in gig work, you're just getting paid by YouTube or something like that. It's not likely that you're going to have to send out statements to like Google to try to get a receipt of the payment because you're not invoicing them. If you work at a cash register at like a food truck or in a restaurant where you get paid at the same point in time, you're not going to have any accounts receivable. You're not going to have to worry about that whole collection process. You got a bunch of other things to worry about. You don't want someone slipping on the floor and then suing you. If you're in California, it's going to happen, obviously. But you're going to have to, those things you definitely have to worry about. You probably want to move if that's the case, if you're over here. But any case, fires, that's something to worry about. You can't even get insurance for that kind of thing these days, apparently around here. But in any case, But if you have to invoice the client, such as if you're in a CPA firm or if you're in a law firm or landscaping, then you do the work first and you invoice the clients, meaning you have to track the accounts receivable. So that means that you're going to have to want to follow up on the accounts receivable from time to time and say, hey, we would like to get paid over here. And to do that, you could resend out the invoices and say, look, the invoice is overdue. I'm going to resend it out. Or you can send out the statements. Now, the statements are great because possibly you have some people that have multiple invoices that they haven't yet paid you on. That means that the statement can kind of combine them together. Instead of sending two individual invoices, you can send one statement summarizing the total bill that is due at this time. You can also create the statements all at one time, making it part of your normal routine. Possibly every week or every 2 weeks or so on, you send out the statements to either invoices that are outstanding or possibly just for the invoices that are overdue. So just a quick reminder on the invoice. If we go into an invoice here, we note that the invoice is going to be requesting payment for work that has been done. So we'd put the work that's been done. We're going to put the invoice date. That's the date that we send out the invoice, which usually is pretty close to the date we do the work, but most likely sometime after the date we do the work. That's when the revenue is recorded. And then we're going to have the due date, which might be dependent on our terms. So the default terms is usually like 30 days, meaning if I send out the invoice today, I expect you to pay me within 30 days. And if they don't pay you within 30 days, then we're going to hopefully keep on asking for the money, right? So that means that this due date is going to be the critical date, which will be dependent upon the number of days that we have on our terms. And then anything that's overdue, we might want to, of course, send our statements for reminders for overdue items. All right, so let's close this out. Once we send out the invoices to communicate with our customers, we'll just recall, are typically over here in the sales tab, which might be called the customer center in the old lingo. If I close up the ham boogie, you can remember up top, we have the all sales items, which allows us to sort for all of the forms under, in essence, the customer section. And so we can search for the forms under here, which would be the invoices typically, and we can look for the outstanding invoices. And of course, within here, we could say, okay, they're outstanding. We can also search for the overdue invoices. And then I can go over here and say, if either we receive payment, or if I hit the drop down, I see that I have within my options to send a reminder. So we can send a reminder, in essence, sending the invoice again. And we might be able to do that with like a batch action. So if I can select multiple of these items, hit the drop down and send it out or send a reminder. So that's great because you can go in here and kind of send that reminder out. That's not exactly the same thing as the statements, which will give you a summary. One reason the statements might be a little bit easier is because you might be able to kind of automate, when the statements are going to go out, possibly just sending them out periodically to invoices that are outstanding or possibly just to the invoices that are overdue, maybe more automating the system. And also you can send out invoices to those clients that have multiple invoices outstanding. So it might be confusing if they have like 5 invoices that they owe you on to send them 5 different reminders. Might be better to send them a summary of all those reminders in one, which is basically what the statements possibly can do. So we can also find that if we go to the invoices tab, we have the same kind of filtering options that we talked about in prior presentations. Maybe this time we look at the overdue invoices. And once again, within here, you have your same options and you can send reminders and so on. You can select multiple reminders to do a batch action to send those reminders. Or we can go to the customer area over here and we can say that we want to look at possibly the overdue invoices or the open invoices. Let's go with the overdue invoices. And you'll note that we have, for example, this client that has 2 of the overdue invoices. That's where, again, the statements might be more appropriate as they will basically combine everything that's going to be due within to a statement. So that's what we would typically do. And most likely, if you have to deal with accounts receivable, you would like to automate the statements in some way, shape, or form so that you can basically automatically send out possibly the statement reminders to try to collect on the invoices possibly every week or every 2 weeks, either for outstanding invoices or possibly for the overdue invoices. So notice that the plus button is over here now. That's the same plus button that's over here when I close the hand boogie. Plus button populates over here. That's the current layout of the system. That might change. That's one of the things that they could change, that other plus button's always there. So let's go down here into the statements and check them out. So we have the statement date, which is typically going to be the current date. We've got the statement type. So we have the drop down on the statement type. Now the balance forward is typically going to be the default. Open items in the last 365 days, so that might be an option that we could choose instead of the balance forward. The transaction statement might give us more information about the detail of the transactions, remembering that these statements are usually going to be summaries, possibly not combining all the information on the invoice. Remembering that if you're in an invoice for like a construction company, for example, one invoice could be quite long, listing out all the things that were in the bill, in the invoice that was sent out. So possibly in the statement, we might not want to recap all of the information that might be on a very long invoice or multiple long invoices, but rather we want to say, hey, look, this invoice went out. If you want the invoice again, we'll send you the invoice, but this is how much you owe us based on the invoices we have sent out, in the past, would be the general idea, here. All right, so then we're going to say the one that we have all of them, or we have the open items or the overdue. Now, clearly, usually, you're going to be sending them out, not to the ones that are closed. We're not going to send statements out typically to people that already paid us. We're looking for the invoices that are open, but also, you might have a system where you're going to say, hey, look, I'm going to wait till the 30 days happen without hassling them and then send them the overdue invoices. You can imagine it either way, meaning, for example, if you send out your invoice and you have a fairly slow turnaround, like it's going to be due, a very low turnaround period, like 10 to 15 days, then you might not want to hassle them within the 10 to 15 days of payment, and then you're only going to hassle them after they don't pay you, right? But if you have a longer pay period, maybe 30 days or like 60 days, then you might say, hey, look, I'll give you 60 days to pay me, but I'm still going to remind you every 2 weeks as my normal reminder. So whether it's overdue or not, I'll send them out a reminder saying, hey, look, you still owe us this money just in case you didn't know. So you can think about either way as might be as a way you might go. So we're going to say the start date, we'll keep the start date here, 12/19 to 1/15. So we have the range that we can pick up this information from. And so notice that if there's detail from prior to this date, depending on how the statement is formatted, we might not have as much detail prior to that date, right, is going to be, but it might be, so we might just have the balance prior to that date and then possibly detail going forward depending on the type of statement that we're creating. So then we can check off all of the ones. Now, if we're picking all of the open items, they're all going to be checked off. We can see that we have the email addresses here. If we're going to send these out by email, then of course we're going to need the email addresses. We're going to have the balances that are due on the right-hand side. Note that if we're looking at all open invoices, the total balance that is due to us, $5,281.52, should match what's on the balance sheet. So on the balance sheet, you can see in accounts receivable, $5,281.52. Why? Because the accounts receivable are the invoices. That's what increases accounts receivable, which have not yet been paid. Therefore, they haven't gone back down yet. So let's go to the first tab. So that's going to be it. We can cancel it. We can print or preview it. So let's go with the print preview and check them out. So it takes a little bit of time for them to generate. So here we have Craig's Design Landscaping, It's going to be our statement. So, and it's going to be summarizing the invoice. Here's who it's going to. We have the list of forms that are going to be going out. So the statement number, statement date, total amount due, it gives us a nice summary up top. And notice the first item here, 12/18/24, is the balance forward. What does that mean? Why is that there? Because when we set that first starting date, this is the balance forward. It's not giving us the detail prior to that date. If you want like this summary detail prior to that date, then you can set that beginning date further back in time, and it might give you like the summary detail down here, right? But it's going to start with that balance forward, and then it gives us the stuff that happened within the date range, 12/21, the invoice number. Notice that this doesn't possibly give us all the information on the invoice, although it gives us a little summary, front yard, hedges, and sidewalks, and so forth. But if it was a really long invoice, it's not going to give us all the detail. But it does give them the invoice number so they can say, hey, look, if you want to look at the invoice, we already sent it out before. Check it out. If you lost the invoice and you want more detail, we can send you the invoice again and you can check it out. This is just the summary. Notice we have a running balance on the right-hand side. So this 459 plus the 108, that's what's giving us the 567. And then on 12/22, there was a payment that is decreasing the running balance. We have a payment from that one. And then we've got another payment here of the 220, and that gives us the running balance that is still outstanding of the 239, and that's what's summarized up top. Let's just take a look at another one. This one just has the balance forward. This one has the balance forward. A payment here brought the balance down to 0, but then there was another invoice that went on the books of 1036, that one is still outstanding. We haven't received a payment for that one yet. This one, we had a balance forward in the payment. This one, we had 0 balance forward. We had one invoice that went out in the current period. It's still outstanding. We haven't received a payment on that one yet. And this one just has the balance forward. Balance forward, they paid 300, but they still owe us the 450 of that one, and so on and so forth. So that's what they would look like. And like I say, if they want more detail about this invoice, they have it. We sent it before and can then resend the invoice if we get in communication with them. All right, so then we can print them or we can close them. If we want to actually physically mail them out, then of course we can print them. In the digital age, oftentimes we're going to be basically emailing them. We can save them. We can save and send. We can save and close. Okay, so then let's try another one. Let's go to the open the last 365 days just to take a look at the difference between the forms. Print preview. Note that these statements are only giving us those invoices that still have an outstanding balance, a balance that has not yet been paid, making them a little bit more simplified, a little bit easier to read. However, not providing as much detail, not giving us as clear a story. So whether that would be good or bad will basically depend on the complexity of our system. In other words, the prior statements we looked at gave us kind of the beginning balance, which was the activity before the beginning date range. And then it gave us a summary detail of the increases to accounts receivable, that being the invoices, the amounts that they would have to pay us on, and the decreases, the payments that we have received. And it gave us kind of a running balance of that activity. Now that can be a little bit more complex, but it gives us a nice story about what is happening, whereas here, we're just going to have the invoices that still have an outstanding balance to them. Now, why would that story scenario, that more detailed scenario, be better in some situations? Because sometimes you might not have invoices that are be paid in full, especially if you're in like a job cost type of system. It's quite common in those cases where people are going to send you partial payments for the invoices. So in that case, then you want to usually kind of tell a story and say, hey, this is what's happened. We had this invoice that went out, and then you had a payment, and then we had maybe another invoice, then we had a payment, but the invoice has not been fully paid. And that'll possibly make it a little bit easier for them to piece out what is actually happening, which work that they're paying for basically, in the future. Remembering that when we receive a payment, if there are multiple invoices outstanding, we will apply that payment to a particular invoice, right? And usually we're going to apply it to the older invoice. So if they give us a payment, we apply it to the older invoice until that's been paid off, and so on and so forth. which would be typically the case. Now, if you're in a system where usually people pay you in full for the invoice and you don't have that scenario of partial payments, it might be a little bit easier to just say, hey, look, these are the outstanding invoices that you have not paid us on, instead of giving the activity of the increases and decreases. So whether you choose one of these two statements might depend on that, how simplified you want your statements to be, based on whether you have like a job cost system or not, where partial payments are involved. So you can see here we just have the invoice, just listing out the invoice that has the outstanding balance. Now remember that if it lists out an invoice that has a balance that's due, does not mean that that was the amount that was billed or sent out in the original invoice, because they might have already paid us a partial payment on the invoice. That's part of the point that I'm trying to make, that when you would want to have this statement versus the prior statement. All right. So there are those. Let's close this out and let's do the last one, hitting the drop down. We want to do the transaction statement, and let's preview that one. So this is going to basically giving us the activity. Now, what's not the reason this probably wouldn't be the first one you send out periodically is because it's not giving them the amount that they owe you up top, really, right? It's giving you the details. So this is a report that you might more likely use if they're asking you, I would like a nice list of a more detailed item. Then you can basically list this out. It's giving you the invoice, a credit memo went out here, and an invoice, and then it's giving you our totals down below. And so if I look at the next one, we've got the two invoices for the periods and the totals, and so on. Totals. This one has 3 invoices and so on. So this one might be used. It's probably not the default that most people would be using. I would still think that the default would be this balance forward one, because it gives you that nice running balance, which personally I like better because it gives you that kind of story. So normally then you would be printing them out if you're going to be sending them and mailing them, or we can send them, which is going to be more likely the case when you're emailing people, or you could just save and close it here. So now we can track the statements that went out. So if I go back into the ham boogie, we're in the sales area, just as a reminder. If I go into the customers, close up the ham boogie, and then I want to look at just the open invoices, because that's who we sent the statements to. And maybe I'll choose this one down here that has the 2 open invoices. You can see in the tabs up top, we have the transactions. That's where we are by detail. But then we have the statements area. So let's go into the statements, and we can see the statements that have gone out here. And then we could possibly we could print the statement, and we can send the statement. If I print the statement, it's going to take us into this preview type of format, so that we can see the statement that went out, so we can track that detail. So that's going to be the idea of the statements.